Using Dr. Martens as a case study, we can carry out an initial review of the financial statements. Firstly, the profit or loss account. We can see that revenue has dropped from £1 billion to £877 million. This is a significant 12% reduction. We've no information on why this has happened, but now that we know this is the case, we can perhaps start looking for information on why. You can see here that Note 3 may give more information. Note 3 splits revenue between the different channels we learned about. We can see that direct-to-consumer revenue has increased slightly, while wholesale revenue has decreased. Returning to the profit or loss account, we can see that cost of sales has decreased, but we would expect that with a reduction in revenue. Selling and admin expenses have increased. Again, we have a note reference for this, which you could refer to for more information. The profit for the year is much reduced from the previous year, but we'd expect that with a reduction in revenue and increase in costs. Now the balance sheet, or statement of financial position. Let's consider each of assets, liabilities and equity one at a time. Firstly, assets. If we look at the figure for total assets, there hasn't been a huge change during the year. A figure of £992.6 million at March 2023 has decreased to a figure of £952.4 million at March 24. Reviewing the figures for any which appear to have moved, right-of-use assets have increased. In simple terms, these are assets which are leased by the company. Trade and other receivables have decreased, as has cash. We don't know why this has happened, but we can note this information in case it becomes relevant when we complete our financial analysis. There are note references here which you could look at if you wanted to try and find out further information. Next, liabilities. The overall liabilities figures haven't changed much. Worthy of note is perhaps the figure for trade and other payables, which has decreased by around 28%, and the lease liabilities, current and non-current, which have increased by around 20%. Given the increase in right-of-use assets, this is to be expected. Looking at borrowings, there hasn't been a significant change here. Finally, equity, also referred to as shareholders' funds. There's not a huge change in absolute terms. Most of the change which has happened is due to the movement in retained earnings. For more information, you could look at the statement of changes in equity, which gives more information on the movements in these balances. Step 1 gave us an understanding of the company, and now that we've performed a high-level review of its financial statements as well, we can start to try to understand some of the key issues the industry and the company itself faces. As part of the annual report, the company will provide a financial review. This could provide a lot of information. As well as the annual report, we can refer to investor information available on the corporate website. We can find out what the company itself sees as key issues. As with many industries, the footwear one is affected by macroeconomic uncertainty, particularly the reduction in consumer spending. Dr. Marten highlight the reduction in revenue which we saw in the profit and loss account. They've highlighted this as mainly due to a reduction in revenue in the Americas region. Dr. Marten have attributed this to reduced consumer spending, but also what they refer to as a challenging boot segment, highlighting that demand for their product is a key issue. Dr. Marten highlight the focus they have on improving their supply chain. The supply chain is, put simply, the flow of goods from supplier to customer. This is something which will undoubtedly have an impact on their financial performance and something we should be aware of as we continue our analysis. Sustainability affects the entire business, and we've looked at this. Moving on to external commentators, a quick internet search will throw up many articles about the company's performance. Be selective with what you look at. Choose more reliable sources such as the financial press and business pages of large newspapers. Be wary of comments made by less knowledgeable authors. Doing this for Dr. Marten, we find many articles on the recent reduction in financial performance. There are also many comments about the demand for the product, with comparisons being made by other footwear brands perhaps keeping their brands fresh and relevant, while Dr. Marten hasn't kept up. Steps 1 and 2 are now complete, which will help us when we look at more in-depth financial analysis.